North Korean provocations almost every week are keeping the stock markets short of breath. 2 weeks ago, the rocket over Japan and then the test of a hydrogen bomb. The communist regime triggered not only a geological but also a political earthquake. But in the stock markets we have seen only a very small tremor. Why? We will clarify now. Where is the red line of a Donald Trump? And what happens when it is crossed by North Korea? Which scenarios are conceivable and how will the financial markets react? Is this uncertainty bad enough for a crash in the notorious autumn? And what does the Werthstein Index do? The Werthstein Institute assesses the current situation on the stock market.
North Korea, one of the world's poorest and least developed countries, is rapidly becoming the biggest threat to world peace. While still ploughing the land with oxen because of chronic fuel shortages, the country has the world's fifth largest army and is running a costly nuclear arms program, both mainly financed by trade with China. Some 80% of North Korea's exports go to its communist neighbor. This is precisely where the lever could be to bring Kim Jong-un to reason. Is there still a chance that diplomacy will succeed in achieving what it has failed to achieve for the last 30 years?
Okay, let's go to London. Let's go to Giles Keating, president of the Werthstein Institute. One thing is clear, no one knows how things will go in this conflict. Still, let's go through the possible scenarios, please.
Well, look, I think China is crucial. So in scenario 1, China reduces the flow of money that has been very important in helping North Korea build its nuclear power, and as a result of that, the nuclear program begins to collapse and tensions subside. In scenario 2, China promises to do that, but doesn't actually do it. So tensions subside temporarily, but then blow up again. In scenario 3, I'm afraid we get military action, but just perhaps a limited exchange of missiles. And then in scenario 4, it's outright war.
Very interesting, Giles. I personally hope so on scenario 1, but what do you think?
Look, me too. I mean, of course I hope for it, but I also think it's by far and away the most likely scenario.
From London we go to Frankfurt, to Robert Halver, capital market analyst from Baader Bank. Now the White House has already announced that Trump will be advised on all military options. Is outright military action now a possible outcome?
The North Korean crisis is serious because the person in power has nothing to lose. He knows full well that if he relented now, he'd lose face and be finished politically. Hence we have a major problem, which the global community should resolve jointly, but above all China, because China is North Korea's communist blood brother and supporter. If the Chinese don't succeed, we must unfortunately think a step further. For me, that means that then the USA, the Russians and the Chinese must reach an agreement to the effect that as soon as North Korean missiles leave North Korean airspace, they should be shot down, so that the situation can at least be semi-calmed down.
And what would this mean for the financial markets?
A military confrontation because of North Korea would definitely be a shock for financial markets. But then investors would wait and see how far the shock went. And if afterwards, of course with the risks and the collateral damage that would be done in the South Pacific, afterwards things would calm down again. And if the central banks saw to it, as always, that stock markets didn't become nervous, there's no reason to believe that stock markets, which are in any case inured to crises, won't rise again after some time has elapsed.
And now from Frankfurt to Paris, to Valérie Plagnol, Werthstein Institute fellow. What do you think? What are the effects on the markets?
Well, only a global war-like scenario would probably send overall markets to tumble. In the meantime, investors would seek refuge in such currencies as the Swiss francs, gold, probably not the US dollar, because the US would be involved in such a conflict. So I think with the kind of ongoing uncertainties and prevarications, regional markets will be hit at first.
And Wall Street or the European markets?
Well, on one hand, Wall Street is pretty well priced, and right now investors will focus on the coming Fed policy decision for one, and also the debate over the debt ceiling. I think the Trump administration will not be able to deliver a major fiscal reform, and that will probably prompt investors and analysts to revise down their profit expectation. The European market may suffer as well because the euro is on the rise.
Thanks to Valérie Plagnol for this assessment, and look at the current state of the stock market from the point of view of behavioral finance. This is about the psychology of investors. We are doing this together with one of the well-known experts in this field. And for this we go back to Frankfurt, to Joachim Goldberg. Thanks that you are with us.
Hello.
Mr. Goldberg, does the current conflict have the potential to end the bull market of the past few years in one fell swoop?
If anything extreme were to happen, that would indeed be the case. But normally, as long as things stay within these confines, with threats, minor escalations, the market very quickly gets accustomed to the situation, as we see.
Thank you. And now your vote on our scale from 1 extremely negative to 10 extremely positive.
Well, at the moment, the market hasn't got all that much drive, and so I'll only give it a 6.
Thanks to Joachim Goldberg. We look more closely at the situation, especially for the DAX, but also the euro after the vote. Now, however, first to the Werthstein Index, which reflects the market opinion of the Werthstein Institute. It expresses the expectation of the development of global equity markets for the coming 3 months.
Well, with the upcoming geopolitical uncertainties, I really want to maintain my vote to 3.
I'm sticking with my 5. I know we have problems, especially with North Korea. That shouldn't be underestimated. We don't know where that's leading. But we do know that global monetary policy will continue to give support, even if things get bad. Monetary policy is the aorta of financial markets, and I don't believe in clogging of the arteries.
So Valerie's on a 3, Robert has got 5, and I'm following Valerie and following my previous vote also at a 3, balancing those geopolitical risks and also other uncertainties in the market. That's a total of 11. You divide by 3 on average, the Werthstein Index is at 3.7, the same as last month, signalling ongoing caution.
Okay, no change in Werthstein Index in spite of the escalation in the North Korea conflict. We have heard there's much hope of a diplomatic solution. I had promised to you that we would go back to Joachim Goldberg again, who looks at the sentiment of investors on the German stock markets every week since many years. What is the current situation for the DAX?
Ja, das mache ich zusammen mit der Börse Frankfurt.
Do it together with Börse Frankfurt. Looking at the chart, we see on the left a lot of light blue columns as a positive sign. That is, the investors were long on shares. They held shares and were waiting for the shares to rise further, of course. Meanwhile, this sentiment has dissipated. We're just neutral, on the baseline, so to speak. That is, there are no more really big imbalances in the market. Sentiment is, of course, a contraindicator. That is, in principle, we always look at the positions held by investors and draw conclusions from them for the future. And that's often the opposite of what we've seen in the past.
Okay, sounds good, but the euro is rising and rising. And apart from the North Korean conflict, can this make the soup of a continued bull market too salty?
Und ja, viele Marktteilnehmer haben Angst vor
Well, a lot of investors are afraid the euro might get too strong because that would be bad for European exports. On the other hand, a strong euro is also an indicator that money is flowing into the eurozone from abroad, and that money is looking for investments, for example, in our stock markets.
Thank you, Joachim Goldberg. So, no easy situation in autumn in which we have historically seen some big corrections like 1929 or 1987. But we talked a lot about sentiment, and without proper euphoria, things don't seem set for a crash. The Werthstein Institute anyway remains cautious, and we will bring you up to date on the financial markets and the latest within 4 weeks.